Hey, happy Friday. It is March 11th. This is Mark Hines with your week in review. The big story this week was inflation. It was another bad week in the short term for markets. This was actually the fifth consecutive down week for the Dow Jones Industrial Average. The S&P 500 is now down more than 12% for the year. And that tech-heavy NASDAQ is down around almost 20% for the year. So it's been a really rough year. So what's going on in the market? Why is it down? Again, that big story is inflation. We got the sort of February year-over-year inflation number for February. It was 7.9%, which is just huge, right? That's the highest inflation number that we've had in over 40 years. And to kind of put that in perspective for you, if you're a saver, if you had $100,000 in your bank account last year, well, if you can buy about $92,000 of stuff with it this year. So you lost a lot of value just because inflation is eating away at your nest egg if you're a saver. The other thing that's kind of happening in the market this week is oil prices. We saw that West Texas intermediary price for a barrel of oil go up around 129 on Tuesday of this week, which is an all-time high. It's not inflation adjusted, but in terms of absolute price, that's the all-time high. You've probably noticed it at the pump if you're filling up your car with gas. So we've got some really challenging market conditions going on right now. As far as what's causing the inflation, right? The inflation is coming from mainly the easy money during the pandemic, right? The government got afraid that the pandemic was going to hurt the economy, so pumping out a lot of easy money, really low interest rates, stimulus checks that went out to citizens, right? That helped kind of save the economy or prop up the economy during the pandemic. But now the chickens have come home to roost, and we're paying the price in terms of high inflation. As far as oil prices, we've got the Russia-Ukraine conflict going on, which is impacting the supply of oil. Oil is a big global energy supplier. So we've got some issues, again, with oil prices, which also feeds into inflation. So again, it's really tough market conditions. What should you be doing as an investor, right? A lot of people are in a tough spot right now. People are afraid. They don't want to be in the market. They're afraid it's going to go down more, right? They don't know how these sort of conflicts are going to be resolved. The market fear index, the VIX, right, is up around 30%. Excuse me, at the end of the week, which is a high level. So people are afraid to be in the market. And on the other hand, they're afraid to just leave their money in a savings account because, that savings account, maybe if you're lucky, is paying 0.5% interest, even though interest rates are expected to rise, still very, very low. And, that low interest rate, you're getting 0.5% or whatever it is, right? That's not going to overcome the 7.9% inflation number that we're seeing. So people are kind of stuck between a rock and a hard place. My advice to you is, if you're an investor, is just, remember, this is not the first time we've seen a significant decline in the market, right? We've seen much bigger declines, and it's not the last time we're going to see a big decline in the market. From a historical standpoint, the market has always recovered from these market declines and always gone dramatically higher. So don't panic, right? The people who end up losing out in these situations are the ones who, get impacted by the fear-mongering media who tells them, oh, the sky is falling. For certain, the issues out there in the world right now are very, very serious. But the market and the world has a way of overcoming these things and coming back. So don't be afraid. Don't sell everything. Right. Stick to your long-term strategy. Whether you're a growth investor and you can tolerate a little bit more volatility, or if you're maybe an income-focused investor, don't ditch your strategy and try and do anything crazy because the market's getting volatile. I like to give specific stock ideas or examples. So this week, excuse me, I'm going to give one that's a little bit controversial maybe to some investors, but it's DocuSign, right? DocuSign does digital signatures. It's one of those stocks that was extremely popular during the pandemic. Basically, when the pandemic hit, people were saying, you're never going to be able to sign documents in person again. If you ever want to sign anything, you're going to have to do these digital signatures, right? And the price of DocuSign shot up to around $314 a share. It's trading around 24 times sales, which is just really extremely high. DocuSign announced earnings this week. The shares had already been selling off, and they sold off dramatically. The earnings was fine. They exceeded earnings expectations and revenue expectations. The problem is the forward guidance was a little bit lower. I think they estimated about 18 or guided for about 18% revenue growth for 2022, which when you compare that to, they were seeing like 40% revenue growth in sort of 2020 and 2021. Again, a lot of the growth they saw in those years was due to the pandemic. The pandemic kind of pulled forward some of the future growth, but 18% growth rate is really high. If you ever use DocuSign, it's a good solution. It trades now at around 4.5 times 1 year forward sales, which is a lot more reasonable, especially for a company that I think is attractive. I've used it, I like it. So DocuSign is one of those ones you might want to think about if you're looking for investment ideas or looking at different opportunities. The other thing, last thing, fourth point is what can we expect in the week ahead? There's going to be more fear-mongering media. We're also going to see more earnings announcements coming up this week. Kind of the big news is the Fed. The Fed is going to announce on Wednesday what they're doing with the target federal funds rate. Of course, they're expected to raise that rate. We'll see how much they raise it by. But the real story is going to be, sort of the signaling they give about future rates increases beyond that. What are they looking at? What metrics are they looking at? What has them concerned? What are they not concerned about? So that'll add to the volatility in the market in the upcoming week. But again, don't panic. This is not the first time the market has sold off. Don't ditch your strategy. People are very likely going to look back a few years from now and be like, gosh, why did I panic? That was a great time to be invested in the market. So again, the goal, don't panic. Stick to your long-term strategy. That is it for me this week. Thank you very much, and I will see you next week.